Welcome back to Your Average Investor. I've got an update for the challenge account. After our last video on Big Lots, I decided I liked the risk reward enough that I was going to enter a trade. So, Big Lots, I've now entered a single position of Big Lots. It's in addition to, I didn't change my children's place bet. That one's still in right here. But I bought 100 shares at $1.76 per share, and I'm debating. I've got about 50 bucks left. I'm debating snagging myself a call 2 for $50. I don't know if I'm going to do it. It's a debate. It's a big debate in my mind right now, but I'm debating it. So the reason I did this is I was looking at the charts, the risk reward. Obviously, bankruptcy, lose 100%, whatever, right? So you have an option to lose 100% of your money, but I see a very likely near-term bounce back up to the $3 range. And that's actually why I'm not selling covered calls on it yet, is I want to leave it unleveraged so that if it does pop, I can sell covered calls or just sell the shares, which deviates a little bit from the wheel, but I'm liking it good enough for now. So I've got 100 shares. If it pops up, I'll either sell around the 3 to 3.5 range or start selling covered calls on it. If for some reason, it really ramps up, I could see a potential for this coming back up to the $8 to $10 range as well. That would require some sort of catalyst. I think the most likely catalyst in the next several months is that this gets some attention by Wall Street Bets or other Reddit communities, and that that puts it up over the top. So again, one of the reasons I really liked it when I did the math on it, let me show you guys again. Big Lots has a float of 28 million shares. Take 28 million, divide that by 100. That's the number of option contracts that it would take to control the entire float of Big Lots, literally 100% of the float. Now, what's interesting, in addition to that, is look at the institutional ownership. The institutional ownership, its last reported was, it's going to be reported again soon, but was reported at 60%. The short interest report is at, I think it's 28%. So that's basically the entire float that's not owned by institutions is being shorted right now. So if you just want to take, let's just take this 60% number, right, institution, and we're going to say there's 28 million shares minus the 60% that they own. So that leaves 40% of it for, retail investors. That's 11 million shares divide that by 100. That takes 112,000 contracts to control the entire float. Let's say you got a contract at an average of 50 bucks a pop. Oh, excuse me. Divide that by 0.5. Times that by 50. And that only takes $5.5 million, $5.6 million to lock up the entire float, or available float at least, of Big Lots in option contracts. So I'm kind of curious here, and I'm willing to take the risk on it. At these levels, I'm willing to take the risk down to 0, because the risk reward I think is very much in my favor right now. And I've actually, in addition to adding this to the challenge account, I've added this to my personal account as well. So I'm bought in on the challenge account, and I'm bought in on my personal account, just for full disclosure on the position. Anyway, I'm adding into the position. I might, on my personal account, add even more over time, but we'll see. Thanks for watching, everybody. Appreciate your subscription. Catch you next time.